Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, June the 2nd, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together and take a look at the market, macro to micro, the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you do want to get a hold of me, just send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture, this is what we do here live in the go-to and each morning, and then we do live trading during the course of the day. You will need a Skype account, so send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, you want to see more, there's about 2 years of them. You can check out our past performance at Quantum Leap Futures. And if you like what I do, follow me on Twitter at Crazy2, spelled with a K. Okay, yesterday our main hypothesis was a move up into the 91 to 93 and then a move down towards that 79, which is the mid of the gap. Our secondary hypothesis was a move down and then a rotation up into the 93 with the late day probe. Our third hypothesis was a false breakout and then a rotation and then getting stuck in the wick and then a late day probe up to the 2100. So hypo 3 is what actually played out yesterday. This market just does not want to go down and fill these gaps. It certainly looks like they want to go and test that 2100, but we've got to trade what we see, not what we think. So let's start with our news. We had ADP this morning. Came out just slightly less than expected, nothing major, but unemployment claims came out at 267 versus 270, a little bit better, and Draghi basically said that they're going to do QE forever, but they're worried about inflation right now, and they're worried about Brexit. So nothing really did anything to move the market on the news. At 8:35, we've got, well, he's obviously speaking now. I don't know what he's saying because I was listening to Draghi instead. But we've got Powell speaking. 9 o'clock, we've got Bank of England, Carney speaking. 10:30, we have natural gas. And then we have crude inventories today, later than usual at 11 Eastern rather than at 10:30. And then we've got Governor Council Chambry speaking from Canada. So we've got a fair amount of news this morning, so just be careful. You never know what they're going to say that can set the market off. Going to the macro to micro view, I like to use a simple candlestick chart with a 9 EMA, 20 SMA. What I'm looking for is the strength of the trend in each of the time frames where it's been challenged or violated. You can see on the monthly we've had this long trend up. Then in the last quarter of 2015, they challenged the trend, took it back, challenged it again in the first 2 months of 2016, and since have taken it back. And you know, we're starting to get some slope again. Have not got the separation, but the trend is intact on the monthly. On the weekly, you can see we've got slope and separation. We closed the technical gap, failed to hold below the 9, back above the 9, and we've got a nice move. We do have a bit of a technical gap here again, so just be careful that the 9 EMA doesn't get challenged until probably 2063, 2064. So the trend is definitely up on the weekly. On the daily, same thing. We've got slope and separation. There is a naked cross down here at 2057. Don't be surprised if we fail to hold the 9, but that's the destination down at the 2057.75. But the trend is intact on the daily. Moving into the intraday, you can see that we had the strong trend up and they rolled it over and it looked like they were going to start a trend down. We're getting a little bit of a slope and separation, but to me this is more consolidation rather than a start of a downward trend, because we're going sideways and chopping back and forth. Going to the 1 hour, same thing. We've got a lot of chop, we've got a lot of consolidation, market's going back and forth. 30-minute, same thing. Actually got a little bit of a cup and handle, but it looks like it's probably violated. Let me just measure it here for a second. Yeah, it's violated, so that's not a valid pattern. But basically, we're back below the 9 and the 20, so we're just in this chop right now in the 30-minute. In the 15-minute, you can see that we're below the 9 and the 20, but we are getting a possible FUBAR Mr. Sneaky tech gap. Tech gap will be closed up at 95, so just keep an eye on this. This is not set up until we get to 9 o'clock, and most likely going to be a FUBAR Mr. Sneaky tech gap. Going to the 5-minute, we do have a FUBAR Mr. Sneaky tech gap here. This wouldn't be a bad entry down here in the 90. I like it in the 92.50 area, so just watch to see. But we are seeing some weakness here. We've got a pretty strong downward trend right now. Look, we just went down and broke below the FUBAR, so be careful. We're seeing some definite weakness on the smaller time frame. Taking a look at the big picture, structure-wise, we're back inside of this balance. There's 2 levels we got to pay attention to inside of this balance right now. It's down here at the 87, between 87 and 86 level, 85.75 to 87 and a quarter. The prior microcomposite VPOC is at 85.75. The first 2 days after the breakout, the gap up, we accepted price at 87 and a quarter. And then the last 3 days, including the holiday, prices moved up to 94 and a quarter. We're currently trading 92. Likely going to probably chop between the 87 and 92 coming into the RTH session. I do still like the 92.50 as a level. The 3-day microcomposite value area low is 91 and a quarter, so that would be an optimum entry point for a move back towards this 94 and a quarter. The key level above us right now is going to be 96.75. If we can get above the 96.75, even 98.75, that puts us above the prior value area high and the current value area high for a move into the 2100s, and a test of the key level right now, which is a 2102.75, and then of course that all-time adjusted high at 2105 and a quarter. So let's take a look at the overnight. Overnight is pretty much neutral to a little bit bearish. The VPOC was up here at 94.50, shifted down on this move down to the 93, and we're continuing to challenge this 92.50. The 92.50, the reason I was quoting that is it is the value area low for the Globex session. If we can hold inside of the value, look for them to rotate back up to at least the 93, but I think we're going to probably see a shift of the VPOC back up here. If we get back up into the 94 range, we're probably going to get a VPOC shift. So we'll wait to put the VPOC in. Right now, our overnight high is 98 and a quarter. You can see we tested that 3-day value area high in the overnight session. 98 and a quarter is also 1 tick below yesterday's value area high. Our current low is 91 and a quarter. I think it'll hold, but I don't know. but we'll put it in for now. And we got a little bit of an LVN here at 94, but it's not significant enough. This is pretty good Gaussian distribution that we've got going on right now. So I'm not going to mark that. Other than that, we're pretty much in balance overnight, and inventory is neutral to slightly negative. So let's take a look at what we have here. So right now we've got the value area low. That's going to be our key level this morning for trading at the 90. I expect that the overnight low will probably get taken out and will come down here and challenge that at some point in time. Inside, there's really not, this is a pretty good balance area around that 94, and I'll show you why. You look at the, let me just fix this for a second. You can see that we've got this balance area in between the 93 and the 94. You can see yesterday's POC, the most traded time, is right here at 94, which is right where it was 2 days ago and just above where it was yesterday. So this is a pretty balanced area. They're battling it out here. You know, the bears are trying to keep us below that 2100, and the bulls are trying to hold us in the 90s so that we can make another run for it. I don't know who's going to win this battle, but it's very, very two-way trading in this zone. And it really doesn't change much until we get below that 2091 area. So that's why that's going to be a key level for us. And I'm actually using a little bit below to the value area low at 90. So we don't have a big edge right here, in this area. And we shifted the VPOC up into the close. They stole the VPOC into the close yesterday. And then above that, we got the overnight high, and then we've got that 98.50. So this 98.50 is going to be our next trade level. And so this leaves a pretty wide area that we have really not much to lean on to give us any edge. So it's going to be tough trading if we open up inside of value and inside of balance this morning to try to catch a trade. So we'll have to use shorter time frame opportunity. The key target inside of this area, though, is 94. That's pretty simple. It's the balance within the zone. It's also where the Bank of Japan return to the scene of the crime is. We've been through it a couple times. Below the levels get a little bit clearer. Below 90, you want to target the 88.50. You could use the 87.50, but I'm going to just front run it a couple ticks at 88.50, and then got LVN from yesterday at 86.75. If we don't hold 86.75, I expect them to come down here and test the range low at 83.25. I'm still using as 82 as the key line in the sand below us, and then our daily ATR is running 21.75. So off of the high overnight of 20.98.25. Take off the 21.75. Our downside ATR target shifts down to the 76.50, and that's just above that key level of 75.50. That's the first microcomposite VPOC after we broke out of balance, and it happens to be sitting right just one tick above the value area high that we broke out of on the gap, and we still do have this gap zone. I am going to target the 79. That's the midpoint of the gap below us. We've got the FOMC return to the scene of the crime at 81.50. And then below the 75, we've got all those same levels, 73.25, 71.75 naked VPOC. Our next key line in the sand, and this is going to be key support. I'm changing this now to key support. we don't hold the 69.75. I'm looking for that move down into that 57 area, 57.58 area, where we've got that naked cross down there. So all our levels below that remain the same: 69.75, 66.75, 64, 61.50. Remember, 61.50 was our composite VPOC, which shifted down to 51. And really, if we get below that 69, I would be thinking we're back in this area of undetermined fair value, and we're going to chop around in here and come down into the 51 area. Okay, those are the levels below. Above us, we've got the 94. We've got the naked VPOC from yesterday at 97. We've got the naked close at 97.25 and our overnight high. Key level above us is going to be this 98.50. Above 98.50, I expect them to come up and test the 2100. I'm actually going to use it as a trade level because anything above 2100, I want to be long into the 2105.25. But we've got levels above us: the naked close at 2102, 2103.75, 2105.25, and our daily ATR upside target currently at if we hold this 2091.25 is 2113. So this gets shifted up again. So we keep moving the daily ATR target up, and it's now above that rule of 10. And then once we're up here, we don't have a lot to guide us except for our measured moves. We have a double measured move at 2114.75, a measured move at 2125, and then our main target in the 2100 still remains the unequalized all-time high at 2134. If we get into the 2100s, you really don't want to be looking to fade this market because we're likely to make and continue to make a run to that 2134 to adjust the all-time highs as they remain unequalized right now. So those are our levels. Okay, what's our hypothesis? My main hypothesis for the day is an open auction in range. We've been doing, been talking about this for the last week. We just continue to open auction in range. Open auction in range, come down, take out the overnight low, test the 2090 down to possibly the 2086.75, chop around, find buyers, and then start walking our way back up through value and up into the test of the 2100. So that's hypo 1, open auction in range. Responsive sellers down to the 2090 to 2087 area, find buyers, rotate back up and into the test of the 2100. I expect us probably remain in balance again today. The news didn't move us much, so therefore there's still two-sided trading in this area, so I expect it to be very rotational today, but with a slightly upside bias. Hypo 2. Hypo 2 is an open auction in range, in value, a move up into the 97 to 2100, maybe a false breakout, and then responsive sellers to step in and rotate us back through value, down through 90, and come back down into this 85, 75 area. And chop around into the close with possibly a late day probe down into the 2079 and into that gap zone. So hypo 2 is a pop, failure to break out, failure to get into the 2100s and hold, and then drop down through value and down through range and a late day probe into the 2079. Hypo 3 is open auction in range, take out the overnight low, chop around inside of the mid-90s and do nothing, and just chop inside of yesterday's value area. And then hypo 4 alternative is we open auction in range, come down into the 90s, find initiative buyers, and then rocket us up through the 2100 and take out the all-time high on a trend day up into the 2105, with the range being extended possibly up into the 2110 and complete the rule of 10 up into the 2113. So hypo 4, or the alternative is open auction in range and then find strong initiative buyers and rip us up through into the 2100s and into a trend day, continuation day. So those are my hypotheses for the day. It's going to be tough trading today, gang. So, don't get stubborn. Take your losses quickly. I've been saying this a lot, but whenever you're inside of this balance and open auction, it's very, very tough trading. Did we just put a new overnight low in? Where's my 91.25? No, we held. So, I mean, we're doing a good job to hold the 90s. I just do not want to see us take out that 2090, because it could get ugly and we could get moved down into this gap zone. Anyway, quick look at the Keltner. Oops. Keltner center line and our 24-hour VWAP is up here, and yesterday's VWAP and midpoint are all very, very important level here at 94. We're below it. A move down to test the lower Keltner is going to take us down to 87.75, and that next key level below us. Above the Keltner center line, a move up to take us to the upper Keltner is going to take us into the 2101, and by the time we get there, it's probably going to be 2102.75. Just based on where we're trading right now. Quick look at gold. Gold continues to balance out down here. Current microcomposite VPOC is now just below that composite LVN. We're basically trading around this CHVN at 2115. Our key line this morning is going to be 1210.20. So that's shifted up from the 1209 area. If we get below that, look for them to come down into the 1206. But I'm really watching that 1204.30. Remember that the composite VPOC was down before we rolled over the contract, and before we shifted up, was down at the 1204.30. So 1204.30 is the next big destination below the 1210 area. Really not much to do here until we get back above the 1218 area for a move to test the value area high again of the microcomposite up here at 1221. But if we get above the 1221, look for them to make a run up into the 26 area, 27 area again. And eventually I expect us to come back up into the current composite VPOC, which is up here at 1237.60, which is the most traded price going all the way back to October of 2008. So we're not going to get away from it too quickly. Of course, if we do get below the 1200 and get below this 1197.50, then I think we're going to see some aggressive selling and a move probably all the way down into the 1159 area, 1160 area. But, everybody keeps thinking that gold's going to tank again. I think it's going to hold and just creep its way back up into the 1237, 1250 area. So that's what I'm thinking. We are putting in a new low, so we have to adjust our overnight low here to currently 1290.50. And we still have another 18 minutes to go, so we're likely going to do a make and break on our overnight Globex low and see how low we actually test. So just be careful on the open, as we are seeing some weakness coming in. And this is starting to look like a strong move down towards that gap zone. 87.50 is where you're going to want to see it hold below the 1290. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.